Welcome, ladies and gentlemen, Commodity TV, today out of our studios here in Munich, and with me here is Wiese, the president and CEO of Golden Dawn Minerals, an emerging gold and base metal producer out of Canada. And we want to talk about the last year, 2017, which happened a lot with the company, and Wolf wants to give us an update. Wolf, good morning, how are you?
Good morning, how are you? Nice to see you again.
Nice to see you, and great to get an update, as I think we spoke something like 15 months ago at the Precious Metal Show in Munich the last time, but since then really a lot happened. And maybe you can elaborate a bit time-wise what happened in 2017, because you made good progress, right?
Very good progress. 2016, when I spoke to you in November at the Edelmetallmesse in Munich, we had just completed a deal on the Lexington and the Golden Crown mine and the mill. Then in 2017, we acquired another large area of land, about 11,000 hectares, that hosts about 32 historic mines.
Wow.
And that really was sort of like the icing on the cake for the two mines that are existing, which are relatively small, and the mill that we have. So now we have the opportunity through this acquisition to extend our mill life substantially over what we have officially.
Yeah, fantastic. So when you say the mill life, that means that everything is already existing, like infrastructure, you have power, right? You have roads, you have the mill. Is that correct?
That's correct. Our mill has a maximum capacity of about 400 tons a day. It is powered by electricity from the grid. I might want to add that our electricity is 4.5 Canadian cents per kilowatt.
Oh, that's a bargain.
Yeah, that's a big advantage if you have to power by genset. The mill is in very good shape. We've got it back in shape. We've just finished dewatering the Lexington mine, which is about 17 kilometers away from the mill. And we're working on getting the Golden Crown mine on stream as well.
Okay, perfect. So that brings me to my next question. What is the game plan now? I mean, you said 32 mines altogether, but I think we talk about first about 3 mines, right? Which you want to bring back into production.
What I said was 32 historic mines.
Exactly.
Okay. That doesn't mean that they're still mines. It means that there's possibilities of more ore there.
Yeah.
Concretely, we have the Lexington mine, the Golden Crown mine, and the Maymac mine. The Lexington and the Golden Crown have an official resource according to 43-101 regulations. And
how much is it there?
About 170,000 ounces at the moment, and we're working on expanding that. The Lexington mine was underwater. We've just dewatered it. We had to pump out about 70,000 cubic meters of water, and we finished with that, completed that task in the middle of January. And we're in the process now of getting the mine ready for production. We've cleaned it up. We're putting all the services in, such as air, etc. The adits are very large. They're 5 meters by 5 meters, so we can drive a 20-ton truck down there and haul our ore. So we're set to start cracking rock or taking out ore sometime, probably by the end of March.
Wow, fantastic. So that's how far you are with that.
Yes.
Can you maybe tell us already a little bit before we come to the PEA, because you had very favorable numbers, but can you tell us a little bit how much you think you can mine in that start? How long you think it will take to ramp up the mine to the full capacity?
Well, I think it'll take us all year, not all year, but several months to ramp up to 200 tons a day. And then we have to make some modifications to the mill. That means another we have to install another ball mill in the mill to take the capacity up to 400 tons a day. And we hope to have that done by the first quarter of next year. So this year, our maximum daily production will be 200 tons a day. Now, I may want to add something. We're looking into a German ore sorting technology. It's a company called Steinert out of Cologne here in Germany that has made significant inroads in ore sorting in the United States. They have a plant in Kentucky, and what that means is that you can, certain ores, the ores have to have certain characteristics, can be sorted, meaning that you separate the lower grades from the higher grades. The bottom line of that is that you're able to feed your mill very high grades and keep the lower grades for later on when...
For higher prices even.
Yes.
That's interesting.
And we've tested it. There are a number of these units out, and they work on certain types of ore. We've tested it in December, and we have the last test results coming. I'm expecting them any day. Visually, it worked very well. I don't want to say it works until I see the results.
Of course, yeah. You have to prove it first.
However, if it does work, which is probable, then even though we're only doing 200 tons a day, under our present PEA, we would be able to produce with 400 tons a day, 25,000 ounces a year. We could substantially increase the ounces per year depending on the success of the ore sorting. It's not a matter of success of getting the ore out of the ground. We know that's there. The success depends on the ore sorting and the grades we are putting through the mill for processing.
Fantastic. How does, let's say, financing look? I mean, you are on the way to the production. Do you still need a little bit more money? About, how much money we talk about, let's say, in 12 to 18 months? Can you give a little bit of...
I'm always begging for money.
That's all in the mining business. Right. No, but I mean, are we talking about, let's say, 50 million, 100 million? Or
it's definitely under... The Greenwood Precious Metal Project and putting the Lexington into production, I'm talking only Lexington right now, will require another $2 million. That's including the little bit of service that we have to do on the mill, which most of it we've done, the upgrades on some of the equipment. It'll take $2 million. That's $2 million off spending money in the mill. That doesn't mean the administration costs that are on top of that. And then we'll have to, after that $2 million is spent, we're actually taking ore. I can't call it ore because if somebody sees this, I have to call it mill feed because we don't have a feasibility study. So mill feed. So once we start taking mill feed out of the mine, then we have to work on a stockpile, and that costs about $100 a ton. I'm sorry, and we'd like to have at least 5,000 tons on stockpile at all times, and then we're working on exploration concurrently while we're doing this on the on some of the other properties, specifically the Golden Crown mine. We're expanding the resource there, and so we'll be spending some money there too. So until we receive revenues, and now I'm going to differentiate revenues from cash flow.
Absolutely.
Okay. So this year we will not have any cash flow. We will have revenues
because you reinvest everything, right?
And those revenues will offset some of the costs. So, but I would imagine that with our activities in getting the stockpile done, and it takes 60 days before we sell, we get paid for our first con. So supposing we start sending con in April, so we wouldn't get paid till July or June, the end of June. So we still need money, and that's where for that we've just completed a short form prospectus, and that'll allow us to solicit almost everybody, and it will not, and this, at least in Canada it will not have the stock that is sold to the investors will not have a hold period, and I think the same goes for German investors.
Yeah, of course.
So
that's the same.
so that's what we're doing right now, and thus my recent trip here to Germany and other European countries is to set the ground for a major financing in 30 days, 6 weeks.
Okay, so, perfect, great. So that's all on the equity side, of course, and for the future there's sure some mine financing, project financing, whatever. But let's talk now a little bit more on, I wouldn't say blue sky, but let's say on the bright future, because you've bought the J&L property and you brought out, I think a week ago or something, fantastic for the 3101.
Well, we published the numbers. The 3101 will be completed by the end of this month, and it's being done by P&G Mining, an arm's length engineering company. And just quickly, the project is about 2 hours away from our Greenwood Precious Metal project, also in southern British Columbia, so it's not far away. The project comes from the same vendors than the Golden Crown mine and the mill and the Lexington mine, a Chinese, state-owned Chinese company called Huacan. We managed to get it, although there were other suitors, because we had already done a deal with Huacan, the Chinese mining company, and they had a certain amount of trust because we've completed that deal on time and as promised. So we have a new project called the J&L, which is basically a polymetallic project. It's primarily gold, but it also has a very, very high zinc content, up to 10% in one area.
That's a lot.
Yeah, and gold, it has a gold equivalent of about 9 grams. And in the measured and indicated categories, we have roughly 1.3 million ounces. And the measured and indicated categories.
And that's gold equivalent, right?
Gold equivalent, that's including the zinc and the lead and the silver. And in the inferred category, we have another million ounces. So 2.4 million ounces, and a lot of open areas for exploration. So what we've done is, rather than jump right into it, because we're so busy with the Greenwood Precious Metal project, the way we structured it, well, that's number one priority is getting ore. Mill feed through the mill. So we've structured the deal that we don't have any downside or major expenditures for at least 6 to 8 months until we complete a new PEA on that project. That new PEA is basically akin to a thorough due diligence on our part. So on the strength of that PEA, we will make a decision if we will go ahead with a pre-feasibility study on the J&L project. So that's about 8 months away. That decision, and no downside for us. So we have it tied up. We have an option agreement, so there's also, I have to say this, like all mines, there's already a lawsuit. Somebody that was trying to get the project for the last couple of years is suddenly sued Huacan, said, we have a deal, you know, you don't have a deal with Gold Dawn, but it's a nuisance lawsuits. You know, every mine that ever is brought into life has in its genesis a lawsuit somewhere. So that's normal. So
at least, I mean, you know what you did, and when you have
but we have a valid
partners that you offer.
We have a valid option agreement, and but I mentioned this specifically because I'm talking about the J&L as a matter of full disclosure.
Yes.
Okay.
Well, thank you very much. That sounds like a busy year in front of you, and keep it going. I would say, bring it in production. All the best.
Thank you very, very much for having me again.
Yeah, thank you. Yeah, ladies and gentlemen, that was Wolf Wiese, the President and CEO of Golden Dawn Minerals, and you heard it. 3 mines to bring into production. The mill is ready for takeoff. Everything is there. The infrastructure is there, and all is ready to rumble. I would say, ready to really produce. And hopefully the company can do the first 10,000 ounces this year when they work on full capacity. guarantee that will be 25,000 ounces of gold equivalent will be possible, and even much more blue sky on the J&L property. So check it out. Thanks for watching us. Bye bye from Munich.